GetCrack. Wake up, motherfucker.
More on this breaking news now with Nick Wadhams. He is Bloomberg's national security reporter, one of the reporters behind this scoop. Nick, tell us what we know so far.
What we understand is that Panama's government is essentially looking at the possibility of scrapping the contracts with Hutchison Ports, which is a subsidiary of CK Hutchison, of course, the major conglomerate based in Hong Kong. And the issue there is obviously this comes amid a lot of the pressure from President Donald Trump, but what they're looking at is whether the port deal that was originally signed around 1997 and then renewed in 2021 may have broken or gone against the Constitution because there's some allegations or concerns about issues around taxation and other matters. But what we understand at this point is that Panama is thinking of canceling that contract.
Canceling that contract, severing completely their ties with that Belt and Road Initiative. Is that what we're talking about? And if so, Nick, what would the response be by Xi Jinping?
Well, I mean, you could bet that it would almost certainly go to the courts. China has steadily eroded Hong Kong's autonomy, but, still there is an argument that CK Hutchison, this contract was signed many years ago. And in fact, in 1999, the U.S. State Department assessment at that time was actually that it posed no threat to U.S. interests. Obviously, a lot has happened in the intervening 25 years. And particularly President Trump has said very explicitly that he thinks China is a major threat to U.S. Interests there, and had even sort of vaguely threatened military action. But what you did see is Secretary of State Marco Rubio heading down to Panama this week. It was his first trip as Secretary of State, so a clear priority. Now we're getting this. It really appears like the Trump administration is putting a lot of pressure on Panama.
Yeah, talk to us a little bit more about that trip. It was certainly interesting to see that was Rubio's first international trip in the role. What do we know about what happened on that trip, what conversations were had, what potential concessions were talked about?
Well, really, I mean, at the start, there were two major concessions that Panama gave. One was to allow free passage to U.S. naval ships going through the canal, and the other one was to sever its relationship with China under the Belt and Road Initiative. Whether that's enough will remain to be seen. Panama has slowly been increasing and solidifying its relationship with China over the years through bridges, infrastructure projects. It switched its recognition to China from Taiwan, one of the last countries in the region to do that. So you have had this momentum shifting toward much closer ties with China as China looks to expand its own economic and global influence in places, in countries across South and Latin America. So, you have two sort of momentum pushes here. One is the Chinese influence, and one is Trump coming in and saying, listen, we're not going to accept this, and pushing back hard. So far, it looks like there has been some sort of a momentum shift in President Trump's favor.
Hardly seems like a proportional response, but I guess it's a sign of how much things have changed since the first Trump administration.
Yeah, it's not a dollar for dollar response, Scarlett. And like you say, it's somewhat measured. There's the entity list, for example, adding Calvin Klein's owner to that. There's the antitrust probe into Google. There are tariffs on farming machinery like tractors coming out of the US into China. Some export controls on critical minerals and like tungsten, for example. Now, so none of that is on the scale of the blanket 10% tariff that President Trump put on all goods coming out of China into the US. But it signals a couple of things. First of all, it signals for now that China is willing to come to the table. They don't want to move this conflict to the next level. They're willing to talk, and we know that the administration here have said they're willing to review the initial trade agreement with China to see if they can come to terms on that. But it is also a signal from China that even if they are in a weaker position when it comes to dollar-for-dollar reaction, they do have ways they can retaliate. There are ways they can make life awkward for US businesses in China, and they're giving that signal in their response so far.
Right, absolutely. And maybe one way to do it is targeting U.S. companies like Alphabet. But it's a little curious because my understanding is that Alphabet's Google services are not even really operational or accessible inside China. You know, I do want to ask you about this other thing, which is according to the Wall Street Journal, Trump and Xi Jinping are not speaking today, according to an official there. We do know that Trump has said he wants to speak with Xi Jinping soon and will look to make a deal. We don't know exactly what concessions President Trump is seeking, but they do cover some pretty familiar ground, don't they?
Yeah, I mean, obviously it's very notable if both leaders are going to pick up the phone and speak in and of itself, Scarlett. That would suggest that perhaps they might come to some kind of a meeting of ways on this. Nonetheless, though, the China story is a bit different than Mexico and Canada and even Colombia, because President Trump has been consistently hawkish when it comes to trade policies towards China. He complains obviously about the merchandise goods deficit and, of course, all of the national security and the human rights and the broader issues that stoke division between the US and China. I think there has been some surprise that President Trump pushed ahead so soon with tariffs on China to 10% across the board, covering all goods, including consumer goods, given the executive orders that put in place various studies leading up to the end of March. But nonetheless, everyone will be hanging to see what comes out of that coal. But it's, you know, I would say probably some skepticism would change President Trump's overall views on China.
Absolutely. We know that Trump wants a smaller trade deficit with China and is looking for China to also perhaps do something with TikTok, announce something that will allow TikTok to stay alive in the U.S. Specifically, though, when it comes to geopolitics, Washington is also putting pressure on Beijing to help with things like the Panama Canal as well as Russia.
There's a lot on the table. As I say, on the one hand, you've got the merchandise goods deficit, okay? There's a way out of that. China could come to the table and say, we will renew our purchases of Chinese farm produce and buy other US produce, and maybe they can come to a meeting of ways on the merchandise goods side. But as you say, when it comes to national security side, efforts to control China's technological development, concerns and worries over human rights, all of that is much more complicated. And the Panama Canal, for example, is interesting too, because there's a Hong Kong company caught up in the middle of all of that. It is an indication of the broad pressure that President Trump is willing to use now. He's willing to use tariffs and the threat of tariffs as a blunt instrument when it comes to enforcing, you know, his geopolitical sway over the country. But as I say, that's a much thornier side of things. There might be some middle ground when it comes to merchandise goods, but it's hard to see any of the other issues being resolved near term.
Is a very tough business, and you know, when you think about the tariffs that are being proposed right now, you know, a 10% tariff on crude oil coming out of Canada will be a major hit to refiners, primarily in the Midwest. You know, we import 4 million barrels of oil a day from Canada. It's about 60% of U.S. imports. And a tariff on those volumes will hit those Midwest refiners, who, by the way, their equipment is set up to process that heavy sour Canadian crude. So it's, you know, while they could go and buy U.S. produced shale crude, which is generally lighter and sweeter, but their refineries will not operate nearly as efficiently. So feedstock costs will go down, but they'll operate much less efficiently and probably net negative. So it's,
and there's nothing. I mean, did they pass that along to me and
ultimately
the drivers?
Ultimately, it's going to land in the consumers' laps. Yes.
Right. Interesting.
When you take a look at clean fuel, like this is cleaner, but it's not like e-gasoline or anything like that.
That's right. This is cleaner. Verde can produce fully renewable and even carbon negative gasoline. But the fact is that when you do that, the revenues are heavily dependent on carbon credits.
Right.
There's no term market for carbon credits. It's very much a spot kind of short-term market. So that does not lend itself well to project financing. When we use natural gas as a feedstock, when you can make the connection between a flare going away and us taking that natural gas would have otherwise been flared to produce gasoline, that gasoline is about 30% less carbon intensive than gasoline that comes from crude oil. So there is a pretty meaningful, you know, environmental win there. But you know, that's the focus is commercial. This is taking zero value natural gas or negative value natural gas and turning it into something that has a lot of value.
You guys are based in Houston?
Yes.
Okay, so the center of this country's energy industry in Houston. What's the feeling there about the transition or the evolution, the transition to greener energy in general? Is the momentum slowing because of who's in the White House? Is there some inevitability that it's just going to go at its own pace? What's the feeling there?
I kind of think that most of the capacity to make this transition lives within the major E&P companies, major integrated oil companies, already.
Yep.
So those are the players that are going to make the largest contribution to an energy transition. And so I think that we're going to see a lot less in the way of mandates and a lot less of regulators picking winners and losers, and it'll be much more market driven, I think, as it should be. But ultimately the people that can contribute most to that are the legacy integrated energy companies.
How did the conversation and development with Diamondback come about?
Well, we were in the process of going public, of listing on NASDAQ, and Diamondback came to us with and said, we have been canvassing the market and have really kind of zeroed in on your process as one that can really help us with this natural gas problem that we have in the Permian Basin. And post Diamondback's merger with Endeavor, they went from a large oil company with a gas problem to a very large oil company with an even bigger gas problem. And so now they've got meaningful volumes of natural gas that are not getting the value that it should.
Can I ask one more question?
Go.
I'm looking at Paul. Okay. If we wind up getting easier permitting, though, from the Trump administration, and we get the ability to get natural gas out of the Permian in an efficient way to then export it, does that mess up your model?
It really doesn't. There is such an overhang of natural gas, and Texas is already the most friendly environment, in the states for building pipeline capacity. In the last couple of years, there have been at least two 48-inch, enormous pipelines taking gas out of the basin. The Permian has the benefit of the Gulf Coast and the LNG terminals there in Corpus Christi. So there are places to go with that natural gas, but the volumes are just enormous, and so we are very comfortable that we have a very long runway in the Permian with Diamondback and others, where there's always going to be gas that can't get out of that basin.
Us through what we learned out of Palantir, and more importantly, what should we expect out of this company going forward through the rest of the year?
Well, I think most analysts on Wall Street is really bearish on the company because the high valuation. But what the company just delivered is just amazing, right? It's the validation of their AI adoption story. I think they've been telling the investors since last year. We see Palantir has the potential to become the go-to operating system for enterprises in the AGI world, because their AIP system, especially their ontology system, is really creating a context layer for any companies, because that breaks down the data, logic, and action, and allows the large language model, and especially in 2025, the AI agent to be deployed. That could be like $1 trillion opportunity for the company going forward.
I'm curious, one of the reasons why you did see some bearishness in the stock, particularly over the last couple of years, was their dependence on government contracts. And we know they've kind of broadened out. I saw in the most recent quarter, their commercial contracts business went up 64% from a low base. Does that matter to you? Do they need to have that diversity? Or can that sweet spot be with government contracts, particularly given they seem to have a relatively good relationship with the new administration here in Washington?
Well, I think previously people are talking about their government contract and government business, but I see their commercial business as actually a better potential. Okay. Because as I said, I think large language model is now become more powerful, and especially in 2025, this AI agent could unlock tremendous opportunities and use cases for enterprises. But at the end of the day, you need companies like Palantir to educate company and help them deploy those large language models. And as I said, creating this context layer, we think is crucial for the AGI going forward. That's why our CoinShares AI ETF, AGIX, hold Palantir as the top holding.
Okay, that makes sense. I'm looking at the commercial business, and it's about 1/4 the size of the government business, which is, kind of. The growth rate obviously is a lot faster than the government business. Which is more stable? Usually, I would say the government business is something that you can count on. But given that it's so closely tied to the U.S. government and the Trump administration, is there an argument to be made that the commercial business is more stable than the government business?
Well, the commercial, I would think like this AIP bootcamp is very strategic for the company because they have a lot of company on the pipeline that they can convert to like a big like 7-figure contract. We have talked like I think last earning call they haven't talked about some company from trial to 7-figure contract under 60 days. So that potential is tremendous. But I agree with your point. Like there's some like potential stability from the government contract, especially under the current Trump administration. We're talking about modernization of the army. We're talking about government efficiency. So there's a lot of catalysts from that side as well.
I'm wondering how much you pay attention to things like insider sales, because it's been brought up that Peter Thiel, who's an early investor, along with the CEO and founder Alex Karp, have been among those who've been selling shares of the stock. Data show that insiders sold about $4 billion in stock last year. I know that's not a huge amount, but it's not necessarily a great sign, especially when, as you point out, a lot of analysts are not so hot on the stock with the lower price targets.
Yeah, I think that's not a great sign for insiding sales, but like I think also like Wall Street earnings not that bullish on the company. But just as I said, we see this is a critical player for AGI in terms of the context layer that's like necessary. The context layer that's like necessity for any enterprises kind of adopt AI in a proper way.
All right. February 4th, 2025. Let's look into Palantir. All right, guys. So that was the first stock when I came on this John Galt channel. First thing I said was Palantir, Palantir, Palantir. And I keep talking about Palantir all the damn time. If you got it back in June, you would be up 400% about. Yeah, roughly 400%. If you bought it in that January dip on the 13th, that's up 60% now at the close of today. If you bought it where HB bought it in August, that would be about on this panic sell-off here in the markets. That's roughly what? Let's see. Damn, 300%. Oh, shoot. Yeah, that was a great buy in August. God damn. Yeah, 374%. Fucking hell. Crazy. Well, you know what? Who knows? Who knows what's the next Palantir? But right now, it's almost over. We're almost done with this game. We have to find a new stock to play. This is it. It's over. I think we have to move on from tech. This is the last hurrah this quarter, I think. We'll probably have one more in the fall, summer, fall. And we have to move on to commodities. Oil, gas. So I put in the middle there the video before this one. Little bit about natural gas. You know, I'm very bullish on natural gas. So that was another company. Interesting. Small company doing clean energy in a way where they capture the blow off fuel. I mean, because like when you collect oil, crude oil, you'll get natural gas with it. Most of the time they'll just flare and burn it off. Like it goes nowhere essentially. But if they can capture that and use that natural gas to make other fuels, that's great. So there's new technology out there that can still use fossil fuels in a correct manner. So we'll see. We'll see how that goes. I'll look into that stock, see if it's worth looking into later on. Could be a good play. It's kind of a penny stock right now, $4 a share. Okay, I'll look into it. But for now, yeah. Let's see what else. SMCI. So yesterday I talked about SMCI. Here, yeah, I bought here 25.8 in that morning. Feels like a week ago, man. All these pumps and dumps happen so quickly. I forget which Monday was which Monday, but yeah, it was yesterday's. So 25.8, and it was up 8.6%. So if you bought from all the way from the bottom to the top, that was 13. And if you used SMCX is the 2x leverage of SMCI. That would be about 20 something percent. Yeah, 25 if you got perfect hit from top to, bottom to top. So excellent there. What else we got? Hims. Told you guys last week I was willing to buy it on Friday and Monday. So on like I think I mentioned it on Thursday or Wednesday. I said like, well, if it keeps moving up like this, and get to this level here at 34, yeah, I'm willing to buy, even though it's getting higher and higher, and it keeps going up. Today it was up 7.5%. What's the news? I have no clue. I don't think there's any news the past 3 to 4, 5 trading days. It's just the chart. Somebody knows something. Maybe it's tomorrow's news with, I believe Novo Nordisk will report earnings tomorrow. So, yeah, that's probably their competitor in a way for the drug. What is it? Ozempic, right? So we had the Danish guy on live yesterday. So he probably getting rich off of Ozempic stock. So Novo Nordisk is Ozempic. It's been getting hit pretty badly since June. So I think a lot of people started chasing this stock because they were like, oh, this is a miracle drug. Buy. And then they got hit. So now it's around $82, kind of in this area here. So let me see what happens tomorrow. Maybe this is the time to buy. I don't know. Let's see. So I'll see how that earnings goes. If it's worth buying, I'll just show up tomorrow and say like, yeah, just buy it. Shoot, whatever. Yeah, around this zone. It's quite oversold. It took a hit. So it's NVO, okay, guys? NVO. Interesting. Yeah, I don't know. Maybe that's why people are buying hymns. Okay, what's the next one? CLS. I didn't play this one, but I recommended it on or at least I talked about it. I wasn't gonna tell you guys like what to do, I'm not gonna be like, oh shoot, just take a risk, buy it. Yeah, one of the reasons I wouldn't like say, yeah, go ahead and buy it, because it was right before earnings too. There was like during that drop, it was 2 days before earnings last week. And then once it did its earnings thing, it's just like, man, it recovered everything all the way to the top here. And it's still going up. So even yesterday's dump, you could have bought it and maybe made 20 something percent. Yeah, nearly 20%. Shoot. Crazy. Yeah, the stock market is going wild. I have no clue what's going on. And I would be very cautious. Do your trades, do them quickly, get out. You never know what's going to happen, because we're getting close to the end now in this month. I believe we're going to get to top pretty soon in the next week or two. Maybe if you're lucky, yeah, you can get 3 weeks to 4 weeks more into Nvidia's earnings, but I wouldn't hope for that. Okay. So let's see what else before I talk about Google and AMD right now. Man, I forgot. There was another one. Oh, DNA. Yeah, DNA. This stock right here. Because I was talking about grains, wheat, corn, soybeans, and 2 fertilizer stocks that I'm eyeing right now. MOS, okay, Mosaic, I believe it's called Mosaic Company, okay. NTR, Nutrien, all right. Yeah, Nutrien, that's right. And then we had this one, DNA. DNA is more of a genetics type company, but they're in the fertilizer agriculture business. So it's been doing this movement here since September, trying to make this bottom at 5 to 6, and now it came back up to $8 to 10, and now it's moving up to 14, and looks like it's about to break out. This is a huge base. Well, not huge, okay, not like Deere, okay, Deere company. I'll talk about Deere next. But yeah, June 2024. It's an okay size base, but you can see the history of this stock. This thing was like at $500 when I guess this was a SPAC or IPO. This was during the bad times, right? Because they IPO'd right at the peak of the market in November 2021 to September 2021. And this whole thing, it just crashed all the way down to 6. Ooh, man. So maybe is it time to buy? Yeah, right? Another one is CTVA. CTVA is another agriculture fertilizer type stock, and it went round trip from 2022 back up here to $65 here. So maybe it's about to break out. So I'm watching this one too, but I'm mostly more interested in MOS, NTR, and DNA. All right. So remember that. Remember those 3 things. Now, the other one, yeah, we'll talk about gold later, but let's go back to Deere. So with the tariff stuff, you saw like China's going to put a tariffs on tractors and farm equipment we sell to China. So far, the stock has pretty much ignored it. So I haven't seen anything to suggest like anyone cares about tariffs from China right now. But yeah, okay. The chart still looks good. Still looks good. So we have this nice range built since 2021. And we're hitting this support here, and we've pretty clearly climbed over it twice now. So yeah, Deere could go up pretty high later on. So I'm looking at Deere. So DE is the ticker symbol. All right. You like tractors? You like farming? Yeah, there you go. That's your stock for you. All right. Let's go to the bad boys here. So today, sorry, I'm eating. I don't want to chew in your ear here unless you like ASMR type stuff. So let me check how AMD and Google is doing. AMD down 10%, terrible. Google down 7%. So they did not like the earnings at all. So we've hit a road bump in the NASDAQ today. So tomorrow we should see some dips. And then we'll have to watch out for the actual here, let me show you this. Let me see this. Let me show you this. This is pretty funny here. I love it when Twitter gets mad, So Palantir, AMD, 185 billion market cap, 7.53 billion estimated revenue this quarter. Palantir, 220 billion market cap, 828 million revenue this quarter. Wow. Bro, you don't get future fictional profits. It's what matters. AMD making chips and gold shovels which power AI and trades like 20 times 2025. Palantir is 60 times sales, 160 times forward PE. Laugh my ass off. And only 30% growth guidance fiscal year 2025. What a joke for real. How can investors seriously buy this shit and pump it 25% with these valuations? Look, I don't care. I got my money. If you bought Palantir at like $8, $7, $9 way back when in 2021, you're loaded. You got tons of money. Way better than any Bitcoin performance, that's for sure. And for this year, Palantir basically got you the same gains as Ripple. So 400% right there at the same period. So yeah, you got to pick the right stocks, bro. So if you guys were in AMD, you probably like there's a whole Reddit, probably tons of people on Reddit screaming right now. AMD's going down 10%. How can Palantir go up 26%? What's going on? La la la. Doesn't matter. Doesn't matter. Market does what market does. That's why I keep telling you guys, look at the chart. Look at the chart. Okay. Very freaking easy. Very freaking easy. Okay. Oh, done with that. Let's go to the next video. Oh, before we do that, I got to talk about the earnings. Yeah. Let me get to the earnings. Earnings calendar. So I'll remind you what earnings are tomorrow. And then you got to prepare for that. Okay. All right. Let's see. I'll get my earnings calendar up. No, not now. Let me see that. Get the calendar. I gotta get more organized like Portia. Man. Let's see. Go, sell those. Okay, good. All right. See, Snap. Oh, Snap was today. I think Snap's up 10%. Snap might be fucking. You got TikTok to worry about. TikTok might not be banned, so. Instagram, and Snap are pretty much the competitors. Oh, Snap was up like 12%. It went back. All right, it's just up 4% now. All right, whatever. Guess Snap's not doing that great as I thought. Okay, Chipotle today. Chipotle. Okay, let me see if Chipotle used to be a good stock. It's not so much anymore. Oh yeah, it's down 5%. Yeah, it's still not a good stock. Sorry guys, no more Chipotle. Chipotle is not that hot. Juniper Networks. Let's see, Juniper Networks. I never liked this one. Yeah, it's doing nothing. So nothing, boring. Okay, so Uber tomorrow morning. Disney. Okay, so Uber is Uber. Uber. Disney DIS. Novo Nordisk. We talked about that. NVO. Yeah, if your Toyota usually does nothing. Equinor, yeah, natural gas. I might see if I see something interesting, I'll talk about that. Aurora is basically that Canadian cannabis stock. It's trash. It's penny stock. Okay, and then after the close tomorrow is Ford. So the symbol F. Qualcomm, QCOM, ARM, ARM. So ARM and Qualcomm, very important for the NASDAQ tomorrow because today Google and AMD ain't helping you guys tomorrow. And then O'Reilly Auto Parts, great stock, okay? ORLY, talked about that several times. AutoZone, O'Reilly, great stocks. And they probably will continue to be great stocks. So let me show you those. And then we can continue with the videos. Let's see. All right. Oh yeah, talk about Bitcoin first. Just before the close today, you see this movement here. It was trying really hard before the New York Stock Exchange closed, went up to 100,000, and it just fell right back down into the close. So just like in an hour before close, it tried, and then it just fell apart like this, and then it just crashed right down to 96 again. So we're still stuck in this range. So don't. If you did the trade from here Sunday night into Monday, that was great. Okay, don't expect much more right now. I think Ripple was crazier. Ripple was nuts. So I'm not a crypto guy, but if you were doing Ripple here, if you were like, I think it was midnight, midnight UK time. So that was several hours before the rest of the U.S. Stock market opened, and then this was well after Sunday. Oh yeah, this is pretty terrible, nuts. It went down to like $1.7 up to like 2.75 within like several hours. That was crazy. Good luck. Did they recover UPS? I'll barely, briefly. UPS is getting, I think. I mean, UPS, the chart is terrible. I mean, that's why you don't touch that thing. That thing's been terrible for years now. 2021. I think pretty much Amazon has destroyed that company. Amazon has trucks to deliver between their warehouses. They have local transportation to do the last mile deliveries with their so the U.S. Postal Service can't even compete with them. So essentially, yeah, Amazon has pretty much won. I think that's the problem with UPS. Yeah, I do not believe UPS has anything to do with the U.S. economy at this point. So if you're going to use UPS as a way to gauge the barometer as a barometer of the health of the U.S. consumer, UPS is no longer has done anything since the COVID. So pretty much, yeah. All right. So Amazon won. Amazon's basically a consumer discretionary stock, a consumer staple stock, a transportation stock, an AI stock, well, not really an AI stock, not yet anyway. Infrastructure utility stock. Amazon practically just controls everything. So, all right. Okay. All right. Anyway, good. Okay, very good. Let me see. Okay, Decennial. I talked about that yesterday. Okay, good. Let's see what else. Amazon, and then here. Let's see what's the next video to talk about. Gold. Okay, gold's important to talk about. and currencies. Okay, those are the next videos. Okay, all right, let's do currency first. Then we'll talk about gold.
Extreme moves in the currency markets, because we did see a lot of that over the weekend and today. Let's bring in Jens Nordvig, Exante Data's founder and CEO. He also is the co-founder and CEO of Market Reader, a Wall Street analysis platform. Jens, always great to see you. It's been a roller coaster in the currency markets. We've just seen such extreme swings, and so I'm wondering how your clients are trading this and what you're expecting for the U.S. dollar.
It's really one of those situations, right, where we get a new headline literally every hour. And we've had incredible moves Thursday, incredible moves Friday, and extraordinary moves here on Monday's trading. And now, with the latest headlines, we've actually had the moves more than fully reversed for the Mexican peso, the Canadian dollar, right, because there's this delay in the tariffs that's been announced during the day. And the market is now kind of jumping onto this idea that there's going to be a delay, that even the China tariffs that are supposed to come into effect at midnight, there's an expectation in the market that there will also be a delay for those, even though there has been no announcement specific to that. So it's an extremely erratic market move. Probably some of the most erratic trading I've seen in my career. And I think it's really important to not overtrade the headlines and think about what is the direction we're actually going. What does the administration really want to do? Is it a negotiating tactic, or is it a policy they really want to implement? And I think there's a big difference between what they're trying to do in relation to Mexico and what they're trying to do in relation to China. Two totally different things.
Before we get to that, Jens, I'm just curious, in terms of the wild swings we've seen, how much of that is just positioning into the tariffs, or what, perceived tariffs, and how much is that sort of increasing the volatility here?
Yeah, so I've been working with institutional investors throughout the whole weekend, right, to plan for the trading session here on Monday. And I think a lot of people were just embedding new kind of scenarios for, okay, where are different currencies going to go if these tariffs actually come into effect, right? And we've never known with certainty, and we still don't know. But that's the sort of new mapping out of the new equilibrium that all institutional investors are doing. And the big question is just, are these tariffs going to stick, or is it just negotiating, like a negotiating tactic?
Jens, the currencies to me drive everything, but the people watching this show are typically equity traders, investors. So in your opinion, and back on August 5th, it was the dollar-yen move that got things moving. What should we be watching? Like, what's the one thing that you wake up and say, where is dollar, fill in the blank?
Yeah, so right now, I think we have some kind of proper information about what's going on with Canada and Mexico, but we have no information about whether the tariffs will happen or not happen with China. So I think literally where dollar China is trading at midnight tonight will be crucial, right? Because that's when the tariff will start to officially be collected. And that's going to be the key stress point that we're going to have a reality check, effectively, whether we can relax as much as we've relaxed over the last few hours.
As opposed to looking at the crosses that directly pertain to the countries targeted by tariffs, Jens, are there other currencies that we should be watching, too, for ancillary effects? For instance, tariffs on China means, U.S., Brazil feels an impact, U.S., Argentina, peso. I mean, what are some of the ancillary effects?
So actually today we had some really unusual moves today, right? That we had tariffs announced in relation to Canada, Mexico, China, and the euro was actually extremely weak today. Like, there was more surprise that Trump started to talk about potential for EU-related tariffs during the weekend, and the euro got really scared about that. So you can see that big dip in the chart there. That was really a fear that EU tariffs could be coming soon. So that's probably the one to watch, right? People are really on edge whether he could follow through on those specific threats. And he's been talking about repeatedly that he's not happy with what the Eurozone is doing and the EU is doing in relation to car trade, auto trade. So that's why there's a huge amount of focus on that.
All right, a couple things to look at concerning this. So, All Seeing Guy, I think it was All Seeing Guy. He's in this one, the Argentina ETF. So yeah, there's definitely some stocks you can use to take advantage of currency. So if you're not a currency FX trader, then yeah, you can use ETFs like this to get benefit from it. So a lot of this probably is just due to the mismatch between the dollar and the Argentine peso. And then another one is Turkey. That one is something I played before a little bit. So during the huge moves from Erdogan like did a whole bunch of crazy stuff during COVID. So yeah, you could have got like some quick moves here, like probably mostly down here in 2022. Yeah, it was quite volatile. So I don't know. I don't know when I played this. Probably just did this move here from 18 to 30. I don't know if I did this one. 18 to 36 here. Yeah. So some of these ETFs, it's mostly because of currency dislocations. And if we look at EU, so EWW, I just say EU, it's Mexico, right? So Scheinbaum got elected here around June, crashed the whole Mexican ETF here, pushed it all down. So partially because of the peso reactions, partially because, yeah, Mexican stocks got really hit overall. And now we got this area here that got down to 46 at the start of the new year, end of last year, start of this year. And so if you were playing MEX, MEXX, so this is a 3X ETF that tracks EWW. If you got around like 9-ish, 930, 950, pretty good so far. This week has been quite wild. So it crashed on Monday all the way back down to 9 and bounced all the way back up on the pause, right? So they said, okay, we're going to pause these tariffs for a month. So Trump, and I think Trump also did it for Canada right now. So today, so there's going to be these fluctuations in the currency. We'll have to also watch how China will do. But so far, China's bounced right off here. So FXI, this chart here, does the large cap Chinese companies. So it's bounced up quite well since the 13th, just off the dollar because the dollar stopped going up. And then, so it's been handling the tariffs okay so far. I think everybody's has priced it all in. And then Baba had that whole thing where they say they can do better than DeepSeek. So it's already gone quite well since it went back down to 80 on January 13th. So all stocks dipped on that 13th. This one was one of those that did quite well just based off of news and other things. So it's gone far. It's gone far since then. So watch for these again. And yeah, KC is one of my favorite ones. And I was hoping it could get back to 7, buy some more here, but no, it just decided to just keep going. It's like, oh God. All right, whatever. Tiger, TIGR, another one I watch, FUTU. Also, so I can't recommend anything right now, but since last night, if you look at the Hang Seng index overall, yeah, pretty strong this week. It shrugged off the tariffs pretty well. And I think when it dips again, watch these stocks, okay? And also JD, Baidu, BIDU, and XIACY, Xiaomi. Okay, this one's really nice. It's already broken out of 22. XIACY. They do all the lithium ion batteries and other things. And I believe they also are getting into EV car manufacturing as well. So a lot of stuff there. Okay, that's all I'll talk about China right now. Mobileye, yeah, it looks like it could try again to get back up to 18. So if you bought that dip on earnings on the $14 a share last week and hoping it could get back up to 18 or maybe even higher, yeah, there's still a chance. But remember, February, you got to be careful. February is not going to be easy. I don't think it's going to be a straight shot up right now. We're already wasted one whole week in just a couple more days. That's it. So Google isn't helping. AMD's not going to help. I don't know if Qualcomm or ARM are going to help after tomorrow. And then you got to worry about Amazon Thursday earnings. And on Friday morning, which will be I believe, yeah. So 8:30 Eastern. That will be the unemployment payrolls data for last month. So that'll be a big number to understand. That'll affect the whole market along with Amazon, right? So Amazon reports after the close on Thursday, so everybody will react on Friday morning. So it's gonna be a wild Friday. So yeah, don't expect too much from what you can do now. There's not going to be that many trading days left before we get into the third week, which will be options expiration week, and then the final week of February, Nvidia earnings. Okay, so that'll be what we got to look forward to. Okay, AMD is now down 8.5%. Google 7.6% down. So that's nothing changed much. Let's see what else. Hims covered that. Covered that. Okay, now we'll go to gold. Okay. Let's get to gold, and then I'll wrap it up with the little interesting video I found. All right, but first we'll get to the gold.
With what we're seeing globally and the effect that it's having on gold prices, record upon record upon record. What's your outlook for where bullion goes from here?
You know, as you say, Jennifer, everyone's trying very hard to push the gold price up. You know, what we're seeing is, you know, continuation of de-dollarization, fueled by the actions coming out of Washington and the White House, and on top of that, you know, we've got challenges in the UK. Europe is not in good place with the French and the Germans.
Jay Rillo, I wouldn't be buying any tech stock, especially any stock right now, especially tech or anything related to tech. There will be a big dip around March into April. So if you're waiting to buy something, this ain't it. This is the time to be selling all long positions that you have or hedge the F up. That's about all I can say.
You know, the leaders of the free world, all in a crisis, and of course Middle East and conflicts in every continent. So, you know, gold price has got a lot of upside still. I always say the risk is on the upside, and it's very much intact, that trend.
How much further do you think it has to go? Because some people believe potentially we've peaked.
You know, everyone has been saying that. You've seen the equities have been softer than the actual bullion price over 2024, but I don't think so. And certainly, I mean, there's a lot of reason why the gold price shouldn't go down, and
why?
And because it's when you try and if you try and look at what it's going to take for us to get back to normality in the global economy today, it's not an easy task, and I think we've seen, you know, damage to the US dollar as a reputational currency, and gold has taken that place. And I think what we've also seen, and a lot of people, because I'm sure it's your next.
Daughters of Assassin, Eclectic. Do you see what's up there on your upper left? It says live, Cape Town. So if you can Google Cape Town, you'll figure out where Cape Town is.
Question, you know, Bitcoins and all those are not stores of value. They are trading instruments. So gold has really arrived as the ultimate store of value, and people are buying the physical. What we've got to do in the mining industry is catch up with the price of gold.
Well, and I want to talk about some of the trends that we're seeing in the mining industry, one of which being M&A. We've seen a lot of that potential activity at least starting to happen. Is your expectation that will hopefully, you know, strengthen the mining industry and get to some of those goals that you're just mentioning there?
So M&A really, you know, we need consolidation rather than M&A, because we've got too many companies running too fewer assets. And so you need to consolidate, whether it's in the mid-tier, bottom tier, or the big players. But I think what it's really telling us is, as an industry, we haven't invested in our future, and we're now seeing what we saw back in the early teens of this century, in that we're chasing growth, inverted commas, through acquisition, and we're paying big premiums for them.
Right.
And higher gold price makes it look good for a moment, but things normalize.
What does that mean for Barrick's assets then, and especially on the African continent?
Well, all the assets are very valuable. Whatever assets you got, particularly if you're in gold and copper today.
Right. So you're not planning to exit any of the operations?
Definitely not.
Okay.
No, we constantly look at our core assets because I'm very focused on high quality tier 1 assets, and so there's a market for those non-core assets. But we're a long-term player. We invest heavily in growth, organic growth. We are pointing to a 30% increase in production by the end of this decade, organic growth
at all of your operations
across the group, and that's going to happen without any issuing of shares. In fact, we're buying back shares.
So when are you going to start buying back shares?
We have already started.
Do you plan to continue doing that then?
Absolutely. Certainly where the share price is sitting at the moment, one of the best investments we can make is buy back our own shares.
What do you think, where do you think the share price then has to go?
I think it's got to go up.
Okay, yes, but then what is your goals then for that?
I think, that's the market will judge that, and at the end of the day, what we've got, and we're about to bring out our 2024 results, we have one of the strongest balance sheets in the industry. We were able to buy back our shares, and we're investing all the time in new opportunities. And more importantly, we're about to build out 2 really big mining projects, the expansion in Zambia, doubling production, and then the big gold and copper asset in Pakistan, which is one of the biggest gold and copper mines that haven't been developed yet in the world.
And Mark, I also want to talk to you about another one of your operations that's in Mali. There's been a lot of focus on what's happening, the discussions between the Malian government and also Barrick. What is the next shoe to drop? Where are we at right now in negotiations?
Jennifer, it's been a very sad time for me. I've been in Mali since it was really re-established as a democracy, and I've worked with all the governments since 1992, and I think Mali's got itself in a position where it's really trying to shake out some short-term cash out of the industry, and this industry is the very foundation of its economy. And I think we need to, and so communication, to your point, is really important.
Right.
We are in communication. We are working and we're making progress, not as fast as I would expect it, but I'm sure everyone is a little cautious because that's what happens when you get on the wrong side of everyone.
So you haven't agreed to a number to paying back any of what?
No, we haven't reached an agreement on anything yet, but we are making progress, and I think that's the positive of these engagements.
Thank you so much. We have to leave it there. Mark Bristow, the CEO of Barrick Gold, joining us here at Africa Mining in Daba.
All right. So I think gold will report earnings. So that's a ticker symbol for Barrick Gold, GOLD. So they got a nice ticker symbol, easy to remember. They'll report next week, and then 2 weeks we'll have Newmont Mining. So Newmont, NEM. So NEM and gold will be the 2 biggest players, but those 2 stocks haven't done well at all. So I'm like Kinross Gold, KGC, I believe it's KGC, and the silver miner I do EXK, right? So those are the 2 I've been playing. But so far, not bad, I think, for the gold miners. So you'll see the charts when I pull up Samantha's video, and she'll tell you so far what she thinks about gold. Yeah. Okay, that's the next video. Perfect.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We've talked about this week after week after week. We always pick up a new theme. Last week, my theme was, I think it's a sucker's rally, although I'm still bullish. I can't, we've done nothing wrong yet. It's just, that's trader's instinct. That worked surprisingly. And then we're right back into this rotation into cloud. But I do want to show some themes that are definitely working because we've been talking about it as well. Gold is still doing awesome. So let me just show you what I mean by that. Okay, for those who play continuous contract, that's over here. I happen to put it next to the dollar yen because I'm actually right now in this basket trade of higher bonds, yen and gold. We talked about that. It's not always tightly correlated, but sometimes it really is. And then this is an example where I'm looking at a one-day chart of continuous contract, and I'm looking at a monthly ratio of my silver gold. And this has been the reason why I have been, the backdrop of gold has been very, very bullish. So, and for all the macro reasons, you've got to read my big, deep dives. So we're not going to get into that here. But the reason I kind of put that out there is because gold itself, the paper GLD, let me just show you this, was one that we talked about a month ago. And then I said, silver's not ready, but if it stays above 27, and then last week I'm like, it needs to stay above 37. This was one that had formed a bullish engulfing, right? After all this right here, warning, before Trump came in on October 29th, and that rotation to Bitcoin, kind of stole some of the thunder. Anyway, we've been in a chop fest on the daily. I couldn't trade this on a daily if I wanted to, but on a weekly, it's beautiful. It is a gorgeous trend. We had a pullback, this is true, but this is also into Trump and all that Bitcoin nonsense. But anyway, the point is right here on the 6th, I was like, this is gorgeous. This is a bullish engulfing. Looks like we want to break higher, technically speaking. We got some good reasons for it on a macro front. Point is, we definitely followed through. I said it had to stay above 145, and then it gapped up. Wicked bullish. Now, it's really doing well, and it's taking out, or soon, it's trying, even though it's getting a little chased, it's trying to take out the highs. So that's something for GLD that's been in place for a month, right on that bullish engulfing. Silver, we talked about last week. I said it's trying to base. Now it has to stay above, right? It was 27.17, then it was 28. Now it's pushing higher. And then I had two in particular miners that I really liked that are also doing extremely well. So here's silver. And this is a situation where we talked about this because gold, the GLD was cheap. They were cheap. Silver is like, it's the difficult child, right? You got the golden child and you got the wild child, and gold is, anyway, easy and silver is not. So this is basically what I'm talking about. It's trying. It is trying, but it's also trying a lot of people's patience. So what is easier sometimes is look for the stocks that are breaking out, right? Like the GLD, come in after it's digested and then buy those cheap calls that we talked about. Now it needs to really go into some, call spreads. AEM is one that has been recommended for a long time. Once gold started breaking out because it was a gorgeous trend, digested, broke out, pullback was shallow, breakout, it is digesting, but look at this, and now it's breaking out higher. So pick your miners. I like these particular ones because they have done nothing wrong from a trend perspective, and that makes it easier to then go in, and all this nonsense I worry less about, right?
What about Newmont? Do you watch Newmont,
No,
Samantha?
I do not, because it's terribly run, and they had awful, totally wicked, awful earnings, and a lot of.
All right, you heard that. See, Newmont. So that's a big boy. Barrick is another big boy. So those two, no, those guys are the largest miners, but their stocks are horrible. So horrible. So let me show you something here. So my favorite miner is Kinross Gold. So it's similar to what Samantha showed with I think AEM. Yeah, she likes AEM. So KGC is about the same. Has the same type of chart pattern here. So 9 to 11, that was the last move up here. And yeah, you like that. But let's look at Newmont. So Newmont is NEM. See that? Terrible. It had a terrible earnings. She was right on that. So that thing dropped 15, 16% and then kept dropping further. So it was at a high of like 56, 57, 58, went all the way down to 36. So yeah, you got to pick your stocks, This one's probably terrible. So Newmont, no, stay away. Gold, Barrick Gold, that CEO that was talking earlier, let's see how that one is. Similar, terrible. So it used to be like 20 something, probably 21, and all the way down to 15. See? No. Anyway, she also uses the GLD ETF as a proxy of gold and silver SLV. But if you're actually going to buy the ETF straight, I recommend you use PHYS. Okay, so this thing tracks gold directly, PHYS, and the other one for silver is PSLV. Okay, and the reason I tell you that is because those two ETFs, and I mentioned this before on, I don't know if it's, I'm sure I had to have talked about this at least a couple times on John's main show, or else maybe I mentioned it here, but I don't remember now. But these are the Sprott ETFs. So let me put it in the chat. So gold ETF, and then P silver is silver ETF Sprott. Let's see, Sprott. Okay. And they also have palladium, platinum, and uranium as well, Sprott ETFs. So let me get the link for you guys too. Sprott ETF. Okay, good. Okay, here you go. I'll get the link for you. Okay, put it in the chat so you guys can see this. Okay, PHYS gold ETF, PSLV is the silver ETF. There's Sprott ETFs, and what happens is when you buy even an ETF, so anything that's a collectible, Pokemon cards, baseball cards, okay, physical art, gold, silver, precious metals, basically, platinum, palladium, jewelry, doesn't matter. Anything like that, when you buy and sell for long term, you don't get the same capital gains treatment for stocks, bonds, and what else? Futures are different. Futures are treated different. I can't say futures. Just stock and bonds. It must be something else that's treated the same way, right? Yeah, real estate. I forgot. Duh, real estate. Anyway, so those are, excuse me. So those are the capital gains. So when you hold it for a year or longer, you get a special treatment, right? Based on your income that year. Now, sadly, with the collectibles tax is a separate area in your Schedule D form in your tax. So look at that. And then there's a special box where you have to do a worksheet, and then you have to do another form. So when you do collectibles like that and you report it, you're taxed differently. And the tax is a lot higher than what you would have gotten if it was just like a stock, a bond, or real estate. So to get around this, you buy this ETF. And what they do is that the ETF, when you buy that, is using a shell company to store the gold. And it's a Canadian shell company. So the Canada owns the gold and silver, palladium, platinum, uranium for you. And then they report it in a way that hides the actual mechanics of it. So it looks like you're buying and selling from a company. So it's treated like a share of a stock, but it's actually tracking gold and silver. And they do it in a way where you can avoid all the tax problems. But to do it properly, go to the website and you have to fill out some forms. So even though you're not selling or buying or whatever that stock for over a year, you have to prepare the forms ahead of time and submit it to the IRS, something like that. It's something goofy. So yeah, taxes are hell. I'll just tell you that. I hate it when you have to do all this maneuvering just to get the deductibles that you want, and yeah, I hate doing that stuff. But you really need to do it in advance. So this thing here, you have to know in advance. So if you do it wrong, you mess up, then you might not get that tax treatment. So first step, you have to buy the right ETF. Second step, you got to fill out the right forms appropriately. So even you're not selling that stock and having a tax event, you should have to follow the instructions they give you on that website. So please read it. So if you are playing the old gold and silver long term and using these two ETFs, yeah, you got to do it right. Okay, otherwise you'll be in a big surprise, a big sticker shock when you sell, and then you have to report it, and you do all your taxes, and it's too late. You're like, oh crap! I do my taxes, and I figure out I owe this much of my gains to Uncle Sam, and it's like, oh, because you didn't fill out this form correctly, that form correctly, and all. Oh, headache. So it's kind of like setting up a trust or something. You know what I mean? All right, guys, enough of that. That was digression, but it's very important for you to know. And futures itself has different tax treatments, which is beneficial. Maybe one day, you know, I'll talk about those. So if you guys wanted to trade futures, or even not even futures, you could do options on the SPX, the index, and they also have a different tax treatment too. So very interesting things, and that's under the CFTC rules. SEC rules are Security Exchange Commission and the CFTC Commodities and Futures Trading Commission. Actually, we have some news on the CFTC. So maybe if I finish this up quickly enough, I can talk about Trump's temporary vice chair or something. Yeah, something happened today. So anyway, back to the video.
Institutions actually dumped it because it was so bad. This is one that's coming up from the bottom, and the only reason it's rising is because the underlying is rising. It's still underneath the 200. It has so much work to do. It's not my flavor. Like I said, I like stocks breaking out. I have to be very convinced of an oversold bottom fishing play like a BABA, and BABA is very different because it is ridiculously oversold. It is ridiculously left for dead. It is ridiculously undervalued. It's just ridiculous. So this is a whole different kind of macro trade. But long story short, the other reason gold and silver did well, and it wasn't Chinese New Year, although apparently there's a correlation with Chinese New Year and higher gold prices, it is because of the falling dollar and yields. That's very, very bullish precious metals. There also right now is a lot of more rumor, I can't prove it, because of the potential of expected Trump tariffs on precious metals even, that's causing London to kind of move or deliver gold, and then there's too little of it. So do you remember years and years ago, Real Vision used to run, and other people used to run, the real gold bugs would run these videos before YouTube was really a thing about the fractional shares of gold and how we didn't have enough and it was going to bankrupt. It's back. So gold is getting bid up in the spot price as well.
Oh, sorry guys. I'm sorry guys. I think StreamYard's just crapped out. Let's see. Yeah. I gotta reload it. Okay, let's get back to it.
Join.
So pick your miners. I like these particular ones. Worry less about, right?
What
So
about
that's
Newmont?
Okay.
This is one that's 200. It has of an oversold bottom fishing play like a BABA, and BABA is, I have to be very convinced of an oversold bottom fishing 200. It has so much work to do. It's not my flavor. Like I said, I like stocks breaking out. I have to be very convinced of an oversold bottom fishing play like a BABA, and BABA is very different because it is ridiculously oversold. It is ridiculously left for dead. It is ridiculously undervalued. It's just ridiculous. So this is a whole different kind of macro trade. But long story short, the other reason gold and silver did well, and it wasn't Chinese New Year, although apparently there's a correlation with Chinese New Year and higher gold prices, it is because of the falling dollar and yields. That's very, very bullish precious metals. There also right now is a lot of more rumor, I can't prove it, because of the potential of expected Trump tariffs on precious metals even, that's causing London to kind of move or deliver gold, and then there's too little of it. So do you remember years and years ago, Real Vision used to run, and other people used to run, the real gold bugs would run these videos before YouTube was really a thing about the fractional shares of gold and how we didn't have enough and it was going to bankrupt. It's back. So gold is getting bid up in the spot price as well because of that. And then this is under the radar, but clients know I'm diehard for this. And this is a trick that Jeffrey taught me in the last 2 years. is soft commodities trade really well. As they move higher, gold and silver move higher. It's usually soft commodities and then precious metals and then industrial metals if there is a durable inflation theme. Right now, you've seen what happened to egg prices. It's health related. It's bird flu, cocoa, beef, and now lettuce. Because of the California fires, believe it or not, it took out 70% of U.S. supply of salad. DBA has maintained its strength. These are all the type of things that I'm looking at, from technical to intermarket to macro to fundamental. It's weird, but it's my thing. And then I layer on options. So for me, options then is this conversation when you said gold was cheap. And I'm like, yeah, and it's also really time to move higher. So this is the time to go in. Now that gold has run for a solid month, this is the time to get a little bit more, are we going to go parabolic on this, like Baba just did in a week? Or do you rotate this play by doing a call spread, selling? What do you do now? What if you're just getting into this? Clients who have missed this the past month, and now we're saying, I want some gold. What's your suggestion now that we talked about this the past few weeks?
Okay, so yeah, that's my question too. Are we going to break out or not? Gold has definitely started moving in a way that suggests a breakout. Silver, on the other hand, yeah, it's still a big question mark. Right now, the Dixie, so the dollar index bounced down here twice. So from the January 13, that's pretty much why the stock market went as it did. You see that after it just like it topped. So once the dollar figured out its top, it was like, okay, the stocks can start moving higher again. But we've hit that point once again on Monday. Okay, and then we're bouncing back down. So maybe we get 2 weeks of a good run, just like we had 2 weeks of a good run in January, right? And then also that helps with China. So you can see with FXI, yeah, same thing here. January 13th, yeah, January 13th here. We had a pretty good move so far, and it might be able to move higher, but it's going to run into resistance. And the same thing with gold. Look at gold's $2,800. Yeah, so it's broken out here from the last top in near Halloween. And let's see what else. Silver is the problem, as she said. It's kind of like the wild child. Oh yeah, not the favored one. So we're back here, May 2024. This area, it needs to consistently break out. It can't just do this again in October, just completely come back down. And I think if we go in a longer time frame, let's see, weekly, yeah, we have to get through 46. I don't know if it's going to happen right now. We might just be stuck again in this month, and then we pull back. So if that happens, then yeah, hold your horses. Don't get too aggressive with your gold mining stocks or whatever. So that's why I haven't been saying too much about it. And I can go look at the GDX for you guys here. Yeah. Okay. So these two red lines here between 36.9 and 41.78. Yeah, this is the area that I'm watching. And we had a nasty dip. And, that's probably big earnings. You got the Newmont, the gold, Barrick Gold, and all that, too. So it wasn't helping the situation. So we undercut a little bit to 33. So GDX came back up here to 40. Let's see if it gets to 41. And then if it craps out again, then we pull back again. So we're still stuck here. So don't just assume this time we'll get through. All right. We have to wait a while. So let's look at the silver miner ones. Let's see, silver. Yeah, silver miner ETFs. Yeah, this one's a lot worse, in a lot worse shape. Silver miners are terrible. But when they fly up, yeah, it's real nice, right? So EXK, that's the one. Yeah, so see, like you did here from February, you got $1.50 to $5, and did it again from $2.50 to $5, and now I did it again at $3. I don't know if it's gonna get through 4. All right. If it can get through 4, maybe I'll get aggressive. all right, into March. But if it starts doing some weird stuff here above 4 and it looks like it's about to fall back, yeah, get out. Yeah, don't do it. Don't do it. Don't do it. So you got to pay attention really carefully about silver and gold right now. It looks like it could, but it might not. It might just follow everybody else down. We'll have to look at the dollar too, right? Oh yeah, and as Samantha said, yields do matter. Right now we have a nice yield bounce here into February, so hopefully that can help. If this thing can go all the way back up to 92 on the TLT 30-year bonds, then we'll be doing good. Okay. See how the 10-year yield. 10-year yield's at 4.5. It hit a high of like 4.77. Okay. All right. All right. Let me play this last video for you. All right. And then let's see if I can read a couple articles about the CFTC since I mentioned it. And then we'll go from there. This one's a nice little video, I thought. Nice little video.
The Federal Reserve raised interest rates faster than ever, but the economy hasn't responded like normal. So is something broken? Not quite. The answer, like usual, lies in the housing market. In this video, we'll explain the longer than normal lag time between leading indicators and broader economic growth and employment. Leading indicators, like building permits, show where growth and employment are headed. They're not magic, they're mechanical. You need a building permit before you start construction. Historically, when building permits dropped, construction activity and employment quickly followed. But after the pandemic, the lag time between a decline in permits and its impact on growth and employment exploded. Why is that? From the 1980s to the early 2000s, it took 6 to 7 months to build a single-family home. After the pandemic, this spiked to 9.5 months before returning to the more typical 7.5 months. But the real story lies in multifamily construction. Multifamily units inherently take longer to build, about 16 months versus 7.5 months for single-family homes. Over the last 30 years, we've shifted towards building more multifamily housing. In the 1990s and 2000s, 20 to 30% of all units under construction were multifamily. Today, nearly 60% of all units under construction are multifamily. The time to complete multifamily projects has skyrocketed. In the 1980s, it was about 10 months. Pre-2008, it was about 20 months. And post-pandemic, it hit over 30 months. The time to complete all housing units under construction, a blend of both single-family and multifamily, hit a record of more than 14 months during the pandemic. It's now back to 11 months. Why is this so important? One of the main channels by which interest rate hikes slow the economy is by reducing building permits and making new construction projects financially unfeasible. But with a 30-month backlog of multifamily construction, the economy hasn't felt the full slowdown yet. Now that backlogs are shrinking and construction timelines are normalizing, the effects of lower building permits will finally start to show up. If building permits stay low, construction will slow down and employment will fall as leading indicators implied, but with a really long lag time. The bottom line is that leading indicators like building permits still work. They have to because it's mechanical. But the shift towards multifamily housing and longer construction timelines has massively delayed the impacts of rate hikes on growth and employment. Things can invariably change, so it's always important to monitor the sequence of events and the sequence of the business cycle. If you found this video helpful, don't forget to like and subscribe for more insights on the economy. And if you'd like to dive deeper into business cycles and our 4 economy framework for tracking the business cycle sequence, visit epbresearch.com. The link is in the description box below. Thank you for watching, and I'll see you in the next video.
Very nice video. Very clear, very concise, tells you everything you need to know. And that's why we always talk about leading indicators. Always look for the leading indicators. What was the one? I used bond market. I was talking about that. What's another one I used? Man, there was another one we talked about quite recently too. Man, there's so many. I keep forgetting them. So many. The advanced decline of stocks. Yeah, there's tons of them. You know, I gotta make a list and print it out or something. It's a good checklist because not all of them will work all the time. Oh yeah, the transport industrial leading indicator, that one's broken. Doesn't, because we're a service economy now. So it's Abiola says global trend or for long term or living. Let's see, global trend or U.S. So yeah, I'm not sure if it's a global trend. U.S. is unique. China's even more unique. A lot of the Chinese economy is tied up in real estate. So after the great financial crisis, we're still probably about 10-15% of the U.S. economy is real estate. Probably more like 15 at this point. But China's maybe 20 to 30. So yeah, they don't have a big stock market like us. So most of everyone else is in the stock market. So China, real estate as a percentage of GDP. Let's see. Yeah, 20 to 30%. Yeah, at least that's what the AI chat box told me. Okay. So we'll see how that goes. And there is around an 18 and a half year cycle in the global real estate cycle. And I think that will end in 2026. That's why I kind of tell people, if you're looking to sell your house, if you're already planning to sell anyway, you had something you wanted to cash out of it, then you'll get a good price around late 2025, early 2026. I think that'll be the peak, especially in urban areas. If you look at your local market, you could probably find out when the buyers start rushing in and bidding up prices. Then that'll tell you you're near the peak. Okay. Palantir, I sold another chunk, DJ MFB. So I sold some December at the December top, and then today I sold another chunk. I'll probably sell the rest this month, maybe. If I see the market start going goofy, it's over. Get out, get out, get out, get out, get out of tech. Tech is not where you want to be right now. So, all right. Let me read these articles and wrap it up. All right. I found them, and I'll go read them. Energy, DJ MFB, energy is okay to hold if you already have them. But if you're planning to add, wait for later. Let me see what happens this month. I'll get back to you on energy. I'm definitely looking for new ones to get into. LNG, like liquefied natural gas stocks, definitely they are the best type stuff. Okay, so let me get to the article here. All right. Let's see. Bloomberg. So this is from Bloomberg Law. Shaleha Mosin. Shaleha. Okay. February 3rd, 2025. Trump likely to make fresh picks to head the FDIC and CFTC. That's what we're looking for. CFTC here. Pretty important. This is the Commodity Futures Trading Commission. Okay. So he's gonna get new guys up there instead of installing the current acting heads of those agencies to permanently lead the regulators, according to a person familiar with the matter. President Donald Trump picked Travis Hill, who had been vice chairman, to serve as the acting head of the FDIC on January 20th. Let's see. Trump also chose junior CFTC Commissioner Caroline Pham as acting chair of the Swaps and Derivatives Regulator. Pham had been considered as a contender to fill the position on a permanent basis. Other candidates for permanent chairmanship have included Summer Singer and senior Republican at the CFTC, and Brian Quintens, a former Republican CFTC commissioner. All right, so that's it. That's a short thing here. Let's look at what happened today, February 4th. On Reuters, acting CFTC chair restructures agency's enforcement division. The U.S. Commodity Futures Trading Commission will reorganize its division of enforcement's task forces to end regulation by enforcement and instead focus on combating fraud and helping victims, CFTC's acting chairman said on Tuesday. The agency, which polices commodities and swaps market, will be folding previous task forces into two new units targeting complex fraud and targeting retail fraud and general enforcement, the CFTC said in a statement. CFTC acting chairman Caroline Pham said in the statement, the new structure will stop regulation by enforcement and maximize the agency's resources to target fraudsters and other bad actors. Paul Hayek, the deputy director of enforcement, will serve as acting chief of the complex fraud task force, and Charles Marvine, also a deputy director of enforcement, will be acting chief of the retail fraud team. Pham was tapped to serve as acting chair on January 20th when Republican Donald Trump was sworn in as president. Okay, that's enough of that. Very easy. I think this will have implications also in the crypto land. So a lot of cryptos have, they're kind of, you have futures and swap contracts, all this stuff in the crypto world too. Also, they can't figure out what is a commodity and what is a currency, right? And what is a stock? So is crypto a stock, an equity? Essentially, is it a commodity? Is it a futures? What is it? So you'll see some big changes coming along the line. This is just the beginning. So we'll have to wait and see how that goes. And yeah, I'll definitely talk about crypto again as we get closer to the May date. So I think around May to June will be the peak of the last crypto bull market. That'll be the last major peak around that time. So when we get to that point, good hunting to you. All right, get your ripples. Oh, well, Abiola likes Solana. Okay, get your Solanas too. Okay, thank you. Okay, I just put 30,000 in mutual funds. Oh, okay. Yeah, you should be safe there for the most part. I mean, I don't know. Okay, when we get through 2 more weeks, I'll see what I'll say. But I think you should be safe. You should be safe. I don't think you should be worried too much, unless I would say like, oh, it's gonna be a deep crash, and it's better you hold on into a bond fund. So the mutual fund, you should set it to like maximum bonds. Okay, maximum bonds. Digital Panopticon. Yeah, Panopticon's a good word. Yeah, you guys should look it up. Hey, what's up, Garion? Stream's about over. Garion, you can go back and watch it. Okay, I'll see you guys later.